Welcome back to our channel, where today we're diving into something absolutely fascinating that's happening right now with everyone's favourite dinosaur juice, crude oil. Yes, that's right. The stuff that makes your car go vroom and international relations go boom is putting on quite the show in the markets. It's like watching a soap opera where all the characters are barrels, and they're all having emotional breakdowns simultaneously. For those unfamiliar with the current oil drama, black gold has been on a slippery slope since mid-January, sliding down about 17% from its peak, like it suddenly remembered it's afraid of heights. Our technical analysis shows it's currently doing what experts call the sad trombone pattern. You know, when the price goes wah 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 and traders start stress eating their desk plants. Looking at this chart, we can see oil has been bouncing around like a cat on a hot tin roof. We've got a major ceiling of resistance up around the 69 to 70 zone. That's where sellers are camping out with more determination than Black Friday shoppers. Meanwhile, support is hanging on for dear life around 65, and if that breaks, well, let's just say the next floor down is somewhere in the basement around 62, and it might not be very sturdy. Even our resident pessimistic commodities analyst is confused by this one, and he once predicted oil prices would collapse because someone sneezed near a pipeline in Oklahoma. Now, let's talk about timing. March 17th, 21st and 24-25th are what we call directional change dates. Fancy technical jargon for oil might suddenly decide to go somewhere else. It's like your GPS recalculating, except instead of finding a new route to Starbucks, it's potentially wiping out your trading account. The really wild part? We're potentially looking at what technical analysts call a panic cycle around March 17th. That's when traders collectively lose their minds faster than teenagers at a cancelled concert. If oil breaks below 65, it could trigger what's known as crash mode, not to be confused with the mode I enter after eating an entire pizza by myself. Zooming out to the weekly picture, things aren't looking much better. Oil has been in a downtrend since January, stubbornly refusing to break above any meaningful bullish levels. It's like watching someone try to climb a greased pole while wearing roller skates. Entertaining, but ultimately unsuccessful. So what's the strategy here? Well, for the brave souls looking to go long, late March to early April might offer a buying opportunity if prices stabilise around 65-66. Just make sure you've got your stop loss below 62, or you might find yourself in a relationship with oil that's more toxic than your ex. For the bears among you, selling rallies towards 69.70 or 72.73 could be the play, especially if the price gets there and then starts acting more suspicious than a cat near a broken vase. Just remember to bail if prices somehow claw their way above 79, or you might end up as the sad protagonist in a trading horror story. Looking ahead, we've got potential drama on March 17th, more drama in late March, and potentially the season finale of drama in late April to early May. The monthly charts suggest March and April are going to be about as stable as a unicycle on an ice rink. The bottom line? Oil is currently putting on a masterclass in market indecision. It's like watching a squirrel try to cross a busy street. Lots of starting and stopping, and you're never quite sure which way it's going to go next. Whether you're trading this slippery beast or just filling up your gas tank, one thing's for sure. The next few weeks are going to be more unpredictable than weather forecasts in Chicago. Before we wrap up, if you've found this analysis helpful, please subscribe to our channel for more insights that will either help you navigate these turbulent markets or at least give you something to blame besides your own trading decisions when things go wrong. Remember, in the world of oil trading, the only thing more volatile than the price is the excuse OPEC gives for why it changed. See you in the next video. By the way, this video contains about as much legitimate financial advice as your drunk uncle at Thanksgiving contains sobriety. The author is not a licensed financial advisor, economist, psychic, or wizard, despite making predictions with the confidence of someone who is all four simultaneously. Any investment decisions you make after reading this book are entirely your responsibility, and if you lose your life savings based on something you read here, that's between you and whatever deity you pray to when checking your portfolio.